Hey all, Tom Weller here from forexreviews.info. This is part 7 of the Price Action Traders Mindset series. And in this series we'll be going over basic patterns, in particular the channel. Okay, now there are 3 basic patterns that probably you guys are already aware of. There's the channel, there's a pattern called the pendant, and there's a pattern called the wedge. There's also a pattern that some people call a triangle. Okay, what I'm going to show you in particular here though is a pattern that I like to see in the forex market, a pattern that I like, and that's a pattern that in that pattern's called the channel. Right, now these form on a daily basis and they're great for intraday trading, just like for short-term trading. You don't have to use them for long-term or anything like that. They're really great for like getting bias on like the lower than the 1 hour time frame. And like I said, they form on a daily basis. And this is how a lot of intraday traders trade. Is they'll look for these particular type of patterns and then they'll trade them depending on what the pattern's telling them. And like I said, these can form on a regular basis on the 1 hour or anything below. Even the 15-minute they form all the time. And they're just a way of letting the trader know what's possibly going to happen in the market in the future. So anyway, let's start in the Euro US here. And yeah, before I begin though, I want to say that they do form on all time frames. Okay, you commonly get channels on the weekly, on the daily, on the 4 hour. However, they're just not going to form every day. Okay. However, on the 1 hour or lower time frame, which is what we're going to go over some examples here in this video, they form on a daily basis. Okay, and literally, usually, a chart will go from one pattern to another, and that's very common. All right, so let's get into this. Let's start in the Euro US, one of most people's favorite, and we'll just have a look at some recent moves just to show you what I'm talking about. Okay, so here's an example of a recent channel right here. If you see that, price came down, price bounced up, bounced down, giving the ability for the trader to be able to draw a channel. Then it bounced back up and gave an actual official channel drawing, and then the price came down and actually broke through. So this really wasn't a confirmed channel. Almost. And then would have given the trader a nice opportunity around here, but then it broke through. Right? I suppose this probably would have been the only opportunity you could have taken on this pair. I mean, this channel. Right here. Okay? As you can see, boom, 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 a bit of bearish price action, and price went down. Now, I'll zoom in a little bit. I don't know if we'll be able to see these channels as clearly. Yeah, that's okay. All right. And that's the other thing too. To sometimes see these patterns such as channels or pendants or diamonds or whatever you want to call them. Sometimes it's best you can zoom right out in the chart, and they sort of pop out at you once you start looking for them. Okay, so here's a second example on the Euro US. Just a recent move. We don't want to look at anything far in the past. We'll have a look at a few pairs just to show you what I'm talking about. So here's the beginning of another channel on the Euro US. And by the way, Euro USD loves channels. Okay? If you've been trading it for a while, you probably already know that. Okay, so here's an example. Touches the bottom, touches near the top, touches the bottom. And then by the time you've gotten this, and these 3, you would definitely know that this is the beginning of a channel. Right? And so, how many opportunities did this give? Let's have a look. Once identified. We had this. We had this. We also had this. This. And this. And as you can see, if you accompanied with some price action, it was quite a high probability trade. Right? Now, if you're wondering where, if you're trading these sort of patterns, where do you place your stop? Well, that's quite simple as well. You can just place it on the outside of the channel. If the previous low is close, you can place it below that low as well. but it does allow for, in some instances, extremely tight stop losses when it works. Okay, so, and then this is the other thing too, right? Because these play for a while and do give a couple of high probability trades, right, based off the channel, when eventually they do break, like as you can see here, we know as traders that there would be often a lot of stops just below this channel, because we know a lot of traders are placing and trading these channels. So it's a significant thing when they break as well. And often when they break, they move really well in your favor. And this can be a trade opportunity as well. However, I would recommend selling here and, you know, basically seeing what happens just here is a more better method. However, you know, sometimes you might not have been able to get in here, and this will look like a great trade opportunity, and you know, as it's breaking out and it looks like the price is going to continue moving, sometimes you can do a breakout trade when it breaks below. However, and if you're wondering how to trade that, well, you just place your stop just above usually the candle entry. Okay, nice, really tiny stop loss. You don't really, if the market comes back into the channel, you don't want to be in the trade. Okay, so that's an example of a couple of recent channels, a couple of recent patterns on the Euro US. Let's go to the next pair. This is the US Swiss 1 hour, and I'll zoom out, and as you can see, it's doing the opposing sort of thing to what the Euro US is doing. Got this long channel that's drawn out all the way back here. Yeah, we did have a bit of an overextension over here on the channel, but as you can see, price actually respected that overextension and look, broke below, came back in and sort of used it as resistance again. Support and then resistance again. And if you look along here, this channel would have been qualified. What I mean by qualified is you see a number of taps, would have been qualified by here. So if you look here, oh, you could even say that this, if you're really spotting it really tightly, you could say that this was even qualified right here. But that's a little bit, you know, a little bit early. You probably would have still been thinking about whether this is a channel or not. But certainly from here, sell opportunity. So maybe, and a buy opportunity here, right? And that's it. That's the basics of channel trading, really. Once you identify these, you know, and they look like they're working, you can trade them as long as they're working. And so when a price came up here, you see we got no bearish price action whatsoever here, so you wouldn't you wouldn't get in the trade. Yeah? Okay, so let's have a look at another pair. This is the GBP US, right? This is the GBP US 1 hour. It's another channel again. Like I said, channels form a lot, and that's the reason that it's probably one of the patterns that I actually prefer. The common, you know, formation. You know, you can also call it a formation as well. You know, sometimes when people are talking about patterns and stuff like that, they commonly think that what you're referring to is like stuff like Gartley's and stuff like that. I don't use those sort of type of patterns in my trading. Okay. These are the sort of patterns I refer to when I'm talking about patterns. Patterns that are easy to see. Okay, that form on a regular basis. Yeah. And I think that, you know, if you guys are trading Gartley's and all that sort of stuff, and it's working for you, you keep going at it. I find these sort of patterns a lot more simple. You know, channels, yeah, or wedges. Okay, I find these a lot more simple. If I notice them when I'm trading intraday. By the way, guys, if you're wondering, I don't trade intraday all the time. Yeah. Just because you're a trader doesn't mean you have to be actively trading all the time either. Right? I prefer, you know, often I prefer just, you know, set and forget sort of strategy, you know? You place your trades and you can walk away. You know, intraday involves a little bit of looking on the chart and studying it a lot, you know? And, you know, I'm not saying I don't trade intraday. I do sometimes, right? But I don't see it as something that I have to do. I make more money from, in Forex from, going for long-term positions and looking for bigger moves, which is what I go over in detail in the engulfing trader strategy as well, which is coming out, as early as beginning of next month, right? It's a way, that strategy goes over a way of, identifying major moves in the Forex market. And that's where I make my core money from, not from the intraday trading such as this. But this is good trading, this is still good trading, and you should be, as a trader, a price action trader, you should be able to identify these channels. So this is really an important part that we should be going over, right? Identifying the channels and wedges and pennants. And if you are an intraday trader, then you should love this, because seriously, this is one of the key factors that you should know about. You don't need to know about, indicators and stochastic and all them. They just follow price, guys, okay? But these, allow for really extremely tight entries. And they don't, as you can see, we've got a bit of a, let's draw this one in from the past. We have a channel here. As you can see, they eventually get broken. But what happens when they get broken? They do offer a good trade opportunity as well when they're broken. That's it, bang. Next candle, buy. Right? And you can see, like, this one here, it started all the way from back here. Right? And you could say that's a top here. Yeah? And then you could say that this is a bit of a wedge. Right? I don't like wedges so much. They don't do it for me. I like channels. I like channels, or if I'm going to use patterns, I like channels, or yeah, I like channels. That's my favorite. Okay, if I'm going to use anything, I like it to at least look like a channel. Triangles are okay, but I prefer channels. Right? They're a lot more predictable, and I find them easier to see. And what I find easy to see and simple is usually often what I find that a lot of other people will find easy to see. That's the thing, is if a pattern's really complex, such as, some of those patterns like, say, the Gartley and stuff like that, then it can seem complex for the trader as well. And I don't really want to be just trading with the people that find it difficult to see a pattern as well. Okay. I think they used to be a lot more I think like patterns like such as the Gartley and all these other previous patterns that, like when you're reading those books, I think they used to be a lot more powerful in the past. I'm not saying that they're not powerful now, and I'm sure a lot of traders still make money from these patterns. But I think a lot of traders are really trying to cut back and create, a more simple approach to trading, right? Which is what I fully believe in as well. Like, I think people are starting to cut through the fog, right? Trading doesn't have to be complex, It doesn't have to be. So here's an example. Here's a nice channel. Being price comes up here, confirmed here, which you could have sold down here. Did have a buy opportunity here, but as you can see, the price didn't really go up very well. But that's the nature of Forex. Sometimes it moves in your way decently, sometimes it doesn't. However, as you can see, is when it broke below, it really sold off, didn't it? So you can see that a lot of people place their stops below here. And the longer the channel goes for, usually the more stops are going to be below. Like even this one, I mean, look at this. This is a bearish channel, right? Bearish meaning that lower highs, lower lows. And then even when price broke below here, it had a nice little fall. And this one gave multiple opportunities. This is the GBP/US, by the way, if you're wondering. GBP/US 1 hour. And so confirmed by there, gave 2 opportunities. Yeah. And if you're waiting for down here a little bit further for an ultimate confirmation, you can do that as well. Here's an example of a bit of a wedge, an opposing wedge. Okay. Like I said, they're not my favorite pattern. They're not the sort of pattern I don't trade those patterns. Let me put it that way. Okay, but channels I like. Easy to see. They can last for a long period of time. Sometimes they can do 6 taps or more. Okay, here let's have a look at this one. Tap here, tap here, tap here. So it's definitely, it's confirmed by here, right? Bullish signal tells you end of the trade. But you know what? This is the thing. Like, a lot of traders like to trade channels up and down. Now, if it's a sideways channel, yeah, that's cool. That's completely fine. However, when it's a strong bearish channel, right, or strong bullish channel, I highly recommend just trading in the direction of the channel. It's going to be a lot easier. Like, as an example, when price came back, whoop, bear with me for a second. When price came back to here, gave a nice sell opportunity, right, which was confirmed from here and here, right? Gave, sometimes the channels only give one good trade, but that one good trade is good. Now, this is the interesting thing. A bearish channel is usually broken by a bullish move. Okay? And a bullish channel is often broken by a bearish move. And that's one thing to be aware of too. Okay? When the channel's been going for a long time, it's been moving down really strongly, it's often going to get broken and move up quite strongly. Because and the reason I think that happens is it's a little bit of a self-fulfilling prophecy. A lot of people place their stops above the channel and they become so confident by the end, and the majority of the traders wait until the end before they decide to trade the channel. Now that's not recommended. You want to get in as early as possible once you identify these channels, right? And when there isn't one, or you think, oh, is this a channel? If you're thinking, is this a channel? Then you don't trade it either, because that means that other traders are thinking the same thing as well. Okay? You should have at least a few taps so that you know that it's a channel, and then align it with price action or whatever other thing you want to align it with other than price action, and then take the trade. Yeah? So let's have a look at this one. Price came down, bing, bounced up here, didn't get bounced to the top, right? Okay? Bounced the top here, bounced the top here. So now we knew that this was a top. Okay? Price came back down. And like I said, it's not going to always come down to exactly the point of the bottom of the channel. Right? Channels are zones. They're a bit like support and resistance areas, right? Now we know this is a bullish channel, so we want to be looking for bullish signals, mainly. But we did have a nice bearish signal here. And this is what I was talking about. This is a bit like, it's not like raging up. Yeah? It's not raging up. However, the buying signals obviously are better than the sell signals. But let's have a look at the two signals that a person could have traded just by identifying this channel. This one and this one. And you're well and truly identified it in this zone here. Right? Quite simple, yeah? However, like I said, they don't work all the time. And I mean, you might be getting in right near the end. That happens sometimes. But it allows us to have trades sometimes that are extremely tight stop losses. And that's, as an intraday strategy, like I said, this can be very beneficial. Okay, and you can use it as a scalping method as well. Yeah, because your stops are exceedingly tight. All right, so let's go to the next pair. Next pair I wanted to show you was the New Zealand US. I've just got one more pair to show you after this. Oh, I've got two more pairs to show you after this. Just to show you, because these channels, they form a lot. Okay, so we had a top here, we had a bottom here. Right, we didn't know it was a channel yet. Then we had a bottom here and a top here. Right? So that we knew that now that if price comes down to here after these two taps, that this was a good buy opportunity. So where do we get that? We got a buy opportunity here. Okay, it went okay. Went up pretty high, went up to the previous high. Can't complain about that. Let's have a look at that. Right, from the bullish signal, we got a bullish signal right here. Went up 60 pips. Not bad, yeah? Yeah, from the price action signal. We also had a clean sell signal here. Nice bearish candle right here. And price went down. Now let's have a look at this from the top of the channel. 59 pips. Not bad, yeah? Or 50 pips, just to be safe. Right? You don't know if it might just hover above the channel a bit down there. But as you can see, extremely tight entries. Now you might be like, okay, I'm going to look for a buy here. But did we get some bullish price action here? No, we didn't. Right? So this is once again, like I said, price action keeps you out of a bad trade. Okay? And if you did take a buy here, you would have used, without a price action, you would have used an exceedingly tight stop and you would have been stopped out in here somewhere. Just below the channel. Because you would expect it to hold it wide because it had held it multiple times in the past. You know, you have to give it a little bit of room. Okay, sometimes it pops out and comes back in. Yeah. But you certainly wouldn't have to risk maybe more than 15 pips, you know? Which is about here. 15 to 20 pips. Maybe even 20 pips, yeah. This is a bit of a volatile pair sometimes. New Zealand, so it'd be down to here. Okay, so let's, and you can just put your stop just below the previous low as well. Okay. So let's have a look at another pair. AED-US. Right, let's have a look at this. A couple of channels here. We actually went from channel to channel, really, and that's not uncommon at all. All right, so let me zoom in because you know, so you can see this in detail. I know that sometimes in these videos, people are watching. This is what I recommend, guys. When you're watching my videos, I'm producing these in HD, right? So if you're watching my videos, you can switch the HD on and watch in full screen. Okay. Just letting you know that's a little bit of a tip. All right, so let's have a look at this. We had a bit of a channel formation here, right? Bing, bing. Okay, so we knew that this was a bit of a trend down yet. We didn't know that this was a channel just yet. Then we had a top form, right? And you could all sort of say, oh, it's close, right, isn't it? It is close. And I would say that that's completely valid. Okay, they're close enough. So you would know by here that when price comes down, touches the bottom of this channel, you're normally going to get a bounce. Right? And so what happened here? Got a bit of price action here, bullish price action. Price went up a bit, didn't it? Like I said, it's always better to sell in a bearish channel. But eventually they do get broken. So, I mean, if you're going to be buying down the bottom and you can pick the bottom, you know, when it's about to break, you know, you want to be looking for some significant candles down the bottom here. Then you can get a nice high probability trade as well. Okay, so let's have a look at this. Here, touches the top. Yeah, price goes down. All right, bearish price action. Okay, so let's have a look at this. Then it went from that channel to this channel, right? So where was this confirmed? It was confirmed by here. And this is a bullish channel, so you'd want to be taking bull trades. So we got some bullish price action in here, and look at that, went straight up to the top of the channel. And then what happened when it got to the top of the channel? Bearish price action, price went down. And eventually, what always happens in channels is eventually it breaks the low, takes out some people's stops. And that's why this is such a strong candle, by the way, if you're wondering. This is usually a stop hitting candle. Yeah? Example of a candle that's hitting stops in a way. Alright, so buyers would have been looking around here, but as you can see, no bullish price action. We get a bit of a trend line coming down here. And then we got another bit of a wedgie sort of channel. Okay? And these channels, I still call these channels. And some people call them wedges because it's getting narrower and narrower and narrower the further it goes. Okay? So let's have a look at this. Where would we have a confirmed bottom? Well, by here. Where would we have a confirmed top? Well, after some bearish price action, we had some here, yeah? So now we've got a clear-cut pattern, yeah, from here. Like this was a maybe trade. This was a maybe trade, like if you were really good at spotting this channel. And this is a definite trade. Then you got, you know, some bearish price action here. And you also got some bearish price action here. Price came down. Did get a little bit of bullish price action. So if you'd gotten in there thinking, yep, okay, this looks like it's going to go back up, it was a false move, was it not? And price broke back in and broke back down below the candle, as you can see, and it hit some stops in here. And then the price went right down. Okay? So let's have a look at one more pair. And, you know, with channels, like I said, they form on a daily basis. They're very, very common. Yeah, and you can spot them usually after, you know, 1 or 2 touches. You know, 1 or 2 touches after you spot the first. Like you got bing, 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 spotted, bing. That's 4. See, 4 touches. Okay, and that's sort of what you want to be getting into the habit of looking for. If you want to be looking for these sort of types of patterns like channels, and you're an intraday trader, right, then you just want to be looking to the point where you can see it clearly. Yeah, and oftentimes I'll draw them in when there's just up to here, and then as soon as it touches here and I see some bearish price action, I'll draw it in as soon as I see it. But it does take a little bit of practice, does take a little bit of time. However, as a price action trader, these are these sort of patterns you want to get into the habit of actually seeing if you're trading on an intraday basis, especially if you're trading the 1 hour or lower time frame. Yeah, which is what intraday traders trade. Yeah, most intraday traders do not trade higher than the 1 hour chart because they're not really intraday charts. You know, if you're trading the 4 hour on an intraday basis, you're not going to really get many intraday moves because you're, you know, you're trying to assess your intraday trading with the candles, but, you know, if every candle is every 4 hours, you may as well be going and reading a book or something like that, you know? Intraday trading is for small moves, you know, less than the 1 hour time frame. So let's have a look at the Euro AD. This is the 1 hour on the Euro AD. Here's an example. Okay, I finally found a nice example. Here's an example of a wedge. Like I said, I don't trade these, right? Or a diamond, whatever you want to call it, triangle. Okay, price is moving into a consolidated zone, and then finally it breaks out. And this looked almost, in a way, you could trade the bottom of the trend line. Yeah, but almost untradeable to me. Because by the time it confirms, it's usually broken out. And so to me, because of that's the case, that makes them of little value to me. And like I said, if people are waiting for them to confirm and waiting for all that, and by the time they confirm they break out, well then how are people going to trade them anyway? So, and sometimes wedges go for long periods of time. Like as an example, there was a major wedge on the USD Jappy Daily that lasted for, you know, months. Yeah. And, you know, so on the higher time frames, which is not intraday trading, yeah, sometimes you see these wedges that, you know, can last for months, you know. So here's an example of a slightly downhill channel. And that's what I was meaning about slightly downhill. You can actually trade both ways when it's just slightly, yeah, meaning that you can buy at the bottom and sell at the top. And this was confirmed by here and here. Yeah, so you could have taken a trade here or here. So let's draw this in. Here and here. You could have started trading this. Let's see how many opportunities there were. So not bad. 3 pretty clear-cut opportunities. We had another opportunity here, but it turned out to be a bit of a fake out. Price broke above. Probably would have taken out some stops here. Came in once more. You could argue, oh wait a second, you could clean this up a bit and say that that's completely fine. It's because of this area, okay? Right? So this is a little bit choppy. It's breaking out. And usually when that starts to happen, that's usually when it's going to break out. And it did. Actually broke out to the upside. And usually it's going to break out to the side that is, you know, it's starting to break out. Not necessarily the case. Sometimes it'll break out a little bit, take out some stops, and then it'll come down and they'll break out the bottom. Like really strong. And so that's one thing to be aware of as well. If the channel, you know, you can never know exactly if it's going to be a breakout until it comes out of the market, comes back to the channel, and bounces off the channel. That's the only way you can know it's a valid breakout. Otherwise, you know, breakouts do not have, and you know, most breakouts do not have a high success ratio. So when things don't have high success ratios, you're better off just scrapping even thinking of them in your trading strategy, unless you can work out a way of making them high probability strategy. Like as an example, when you do see breaks above, like okay, say breaks above here, and then you see how it sort of pulled back a bit to the chart. Didn't really pull back on this one though, as an example. But in most cases, it usually pulls back. Let's have a look. I can't give you an example right here. But most of the time it does this. It'll pull back to here, and then it'll give a bullish signal. Pull back to the actual channel itself, and then give a bullish signal like that. You can enter after the bullish signal and place your stop back in, just back in below the channel. I find that works a bit. That one actually has a bit of a probability to it. I, however, find the clean breakouts such as this, they're not great. But as you can see, it broke out, came back down, and retested it, but it just broke back in. So that tells you that it didn't work, right? Then when this one broke out and there's multiple candles outside, that was telling you that it actually most likely is working. And then we got a break above out of this congestion area, and price went up. So if you're following the candles as well, that can actually help a lot to determine whether it's a breakout or not. And that's just something, like as a price action trader, you have to get into the habit of looking at the candles and assessing what the candles are meaning. Okay, well that's it for part 7, where we focused mainly on channels, those sort of type of patterns, and wedges, and what else did we go over? Triangles and stuff like that. But we didn't actually see any triangle. I suppose you could call this a triangle as well. Yeah, so like I said, these are really, so as an overview, as you can see, they're really good as an intraday sort of trading. They're really good to identify in intraday trading because they can give often small high probability opportunities in the intraday charts. Now, like I said, this can work on anything below the 1 hour for intraday. They do but they do actually work on the higher time frames, but that's not for intraday trading. Okay. And I wanted to show you guys the channels that you can see actually forming on a daily basis as well. Alright, well thanks for watching and happy trading.